Welcome back. You're watching Startup Central with me, Nentara Rai, working from home. The countdown is on for 2021. What a year it has turned out to be for Indian startups. You've seen funding of over $9 billion. What you've also seen are many new unicorns. India now has more than 35 unicorns. So what's in store in 2021? Well, the startups themselves are talking about IPOs. Will IPOs be the big thing to watch out for in the new year? How can you own shares of Indian startups and unicorns, whether they go for an IPO or not? Will those planning an IPO decide to list in India? Will they do it overseas? We don't know any of that yet. But to check in on the big trend that's expected for 2021, joining me is Rahul Mandotra from Bernstein. Rahul, thanks so much for agreeing to do this. Thanks a lot for joining us. Now, 2020, we saw a massive upheaval, right? Sequoia Capital, for example, called COVID the black swan event of the year. But what you've also seen is fantastic resilience. Startups willing to pivot, change their business models, all of that, and it's paid off. It's looking like a very different story as we head into 2021. They've burnt the fat, they're focusing on their bottom line, they have a more visible road to profitability. Would you agree with all of these observations?
What's helped because of COVID is that, one, I think the customers, particularly a lot of Indian customers, have started using various online services, whether it's food delivery, e-commerce, education, and that has helped kept the customer acquisition cost lower. And I think that's as the startups have matured, you've kind of seen promotions and discounts come down, take rates or commission rates gone up. So effectively, this year has helped structurally as well the internet economy to boom, because I think one, as unit economics improve, on the revenue side, you're starting seeing better revenue per customer and take rates. And on the cost side, you see less promotion cost from a logistics perspective, much more optimized logistics cost. You're seeing improving profitability. And I think that's a trend that will accelerate going forward as scale comes in. I think what's clear now is that unit economics for a lot of these businesses, which were questionable earlier because of the cash burn that we were seeing over the last few years, I think it's clear now that most of these business models are now mature enough where unit economics on a contribution level are profitable. And I think as this business scale up, you will see businesses being more profitable, and I think scale comes in, these will be high margin businesses.
The road to profitability is shorter, if I can say so. It's far clearer as well. And you're already hearing so much commentary that's coming in for IPOs. You're hearing about some of the largest startups being ready or preparing themselves for a listing in 2021 or maybe 2022. Are you convinced this is going to be the big trend? They seem to be heading into preparation mode. Can it become a reality in the new year?
No, absolutely. I think a lot of public market investors are also excited about the IPOs that are coming next year. And, the public releases from a few of these companies like Zomato, Policy Bazaar, and Flipkart potentially coming in IPO is obviously excited a lot of investors because, unlike globally where internet is a big, and tech is, from an internet perspective, has seen significant investment. India has very few beyond IT services tech investment. There's Info Edge and there's some other, internet companies, but potentially pure internet companies like Flipkart and Zomato and Policy Bazaar are fairly unique. And I think considering the market consolidation that's happened in e-commerce, there are 2 or 3 players. In food delivery now, close to 2 players. Online insurance has seen consolidation with the emergence of leaders there. It's, I think, a mature market which now will move to some of these companies which have got to unit economics profitability, move to an IPO, and do an IPO next year. And I think that is obviously exciting a lot of investors who believe that India being such a large market and the opportunity being so huge, it's planned to happen that there will be successful IPOs in the internet space here in India.
So let me just expand on that a little bit. You've given us a hint that the public market participants are certainly excited. Now, all the startups that you mentioned, or the unicorns that you mentioned, whether it is a Flipkart or it's a Zomato or it's a Policy Bazaar, you've also seen others like Delivery or even a Grofers talk about IPOs. But I've got to ask you this question, Rahul. None of them are saying they will list in India. We don't know the domicile as yet. Do you really think that they're going to look at listing in India? We don't know what the rules will be and how they're going to pan out. But you have got positive signals from the government.
I think a lot of the entity structures of some of these startups are either India holdco companies, or US or Singapore-based holdco companies. So I think the India holdco companies for a lot of these startups will kind of list in India, because I think regulations now have, and SEBI has allowed in some of the regulations where even loss-making companies potentially can list in India through the right kind of regulations. Obviously, the mix of retail and institutional investors has to be very different from a usual public listing of profitable companies. So I think regulations are now becoming more favorable for some of these startups who want to list in India to be able to do so. And I think we will see some of these IPOs happening in India as well. And others will obviously decide to list in the US based on based on the belief that obviously the more mature investors understand valuations, and considering the more favorable valuations in the US markets for internet companies, some of those companies might decide to list in the US or other markets. But I think from a regulations perspective, there have been some clarity now that startups can list in India with the right kind of mix of investors.
Okay, so while we wait for that, and we also wait for clarification on what the rules are going to be, there are hopes that maybe Finance Minister Nirmala Sitharaman will make certain statements in the union budget. I want to check in on another trend. The pre-IPO excitement. Does it exist for all of these startups, whether it's a Flipkart, whether it's a Zomato, whether it's a Swiggies of the world, or the Baijus, or even if they're not right now talking about a timeline for the IPOs? Are we seeing a trend there? Are we seeing some excitement? Are we seeing shares of these unicorns and startups in demand?
So I think it just obviously I think as some of these large companies and very successful market leaders come for IPOs, there'll be interest for pre-IPO rounds as well, and I think that helps establish valuation. And we've seen, a lot of the even global internet companies going IPO in the US, tend to also, take rounds before an IPO. And I think it's no different here. Again, as there is interest for some of these companies, they will do secondary rounds where they will give exits to employees, early investors, and more mature investors or public investors who come at a much later stage when the business model is clear. When profitability is fairly certain, unit economics are proven, will come at a later stage. So we're just seeing the mix of investors shift from the early stage and exit to some employees and shift towards more mature, mix of public and late stage private investors coming in. So it's a natural progression and mix change of investors from an early stage to a late stage and pre-IPO investors that we're seeing now happening in some of these startups, which are potentially going to come for IPO next year.
But in the run-up to that, the fact is, this private space, while it might be becoming more exciting, and family offices, HNIs, all of them want to own shares of these next-gen companies. They're being seen as India's future. All of that. What about valuations? Is that a concern? Because these are valuations benchmarked to what? Maybe their last funding round. There are markups that also take place. These are not market-driven prices. There's also FOMO element that comes in these internet companies. How big a concern are the valuations?
I think on valuations, obviously you've seen valuations for, on the public market side as well. Internet valuations have gone up significantly when you look at the e-commerce market or the recent IPOs of SaaS companies or DoorDash, food delivery, Airbnb. the valuations obviously have kind of have gone up, and I think that reflects the impact of COVID, where we think a lot of the structural changes happening on the digitization is going to be more long term and structural in nature. And I think that is reflecting in the importance of some of these companies, whether it's online food delivery or e-commerce or edutech, or valuations kind of reflecting global market valuations. So I think there is obviously a benchmark, where investors look at the opportunities in India and look at various other mature players, similar profile players in global markets within the US. For example, for Zomato, there'll be a check with, what kind of valuations DoorDash, listing at, and what kind of implied valuations that Uber Eats get. And I think, from that perspective, most of the recent rounds would be in broad range of the same kind of valuations one is expecting globally. So I think there is definitely a benchmark on the current recent rounds as well, comparing it to similar companies, similar large market share companies, dominant companies globally. And I think that's where investors are looking at Indian players as well from the same kind of perspective.
So since you've brought up DoorDash and Airbnb, I want to ask you this. How do you see those valuations impacting or having a rub-off effect here in India? There's, one DoorDash in the world. There's one Airbnb in the world. Of course, you've got Me Too models that have cropped up. You've got, for example, those, in the delivery space wanting to IPO next year as well. How will it be benchmarked?
Yeah, so I think for example, Policybazaar obviously, for Flipkart, you will have various companies, the more mature companies like Amazon in the US, or in China, Alibaba is clearly a fairly direct proxy. But also, some of the business models of a company called Pinduoduo in China, PDD, which is growing at 80-90% year on year, even higher than that, is reflecting to the fact that you can build large e-commerce models in a country like China as well. So I think that is where we think that the benchmarks obviously are in play for Indian companies, and they are getting benchmarked, whether it's in e-commerce with global e-commerce players, or in online food delivery with various food delivery companies like Uber Eats or DoorDash in the US. And for Policybazaar as well, I think it's a fintech company. We have seen enough investments happening in fintech in India and globally, and I think there is broad, whether it's payments, whether it's insurance, whether it's consumer lending, there is a good enough benchmark of both private and public market valuations to benchmark Policybazaar too. So I think there is enough direct similarities to various global companies, similar business models which have been successful, maturity levels and unit economics kind of improving over the years. And I think Indian internet companies are at the cusp of getting that done. And I think the COVID has just accelerated that shift, which is a much more stronger, sticky customer base, improving revenue streams, lower customer acquisition cost, and improving unit economics. And I think that will reflect where the confidence is coming for going to IPO next year, because I think a lot of these companies believe that this is structural now. And as you go forward, these businesses become fairly successful in a market which is very large.
Fair point. But what we've also seen are Indian companies come out with some fantastic products, services. Look at the innovation we're seeing. You've got Byju's, for example, which is the world's most valuable edtech startup. You've got, like I said, fantastic innovation over here. But what you've also seen is that a lot of them have become as big as they have on the back of foreign capital. Yes, you've got the government talking about Atmanirbhar Bharat, all of that. But is there enough domestic capital to fuel the kind of growth and the number of startups and the number of innovators that we have?
Yes, I think all of these businesses are in a way, when we say digital, it is taking away share from the offline world. So e-commerce is taking away share from offline retail, and a lot of whether the offline retailers are actually selling stakes to e-commerce players, as we've seen in the recent past as well. And I think similar is happening in food delivery, where restaurants obviously have to now depend on online players to help them grow their businesses. And I think education is again similar. When early this year and since till now, schools have been closed. Obviously education has moved online, and I think more and more students will have the experience of using the digital channel for education. So I think in a way it will shift, and it's a natural shift from online to offline to online. I think that a country like India, you will see the mix lower right now, and potentially whether it's e-commerce, whether it's e-grocery, whether it's online food delivery, whether it's payments, fintech, all of the penetration in India is fairly low compared to Western markets, compared to China. So we'll obviously see that penetration go up and the mix go up going forward. And I think that's the natural progression of any business becoming more mature, and customers looking for better selection, better convenience. And I think that's what's playing out in e-commerce, in edtech, in gaming as well, in food delivery. And I think COVID obviously has helped a lot of these businesses to accelerate that shift from offline to online in a much faster way. So I think that's a structural shift. And I think the other question, obviously, from a capital perspective, a lot of these businesses raised billions of dollars. I think from an India HNI or a India family office perspective, some of these are fairly large investments that need to be made. But I think the ecosystem is developing as well. I think a lot of the early stage investments tend to be led by Indian funds as well as Indian family offices and HNIs. And I think at a very late stage, when the capital requirement pre-IPO is large, is when some of the largest or slightly more advanced level of investments, large global players come in. So I think it's still a healthy mix of global investors and Indian investors, because you also need investors who have experienced some of these businesses in global markets to give the guidance to promoters or founders to help them scale this and take them to a successful IPO. So I think it's a healthy mix of the right kind of investors which are taking some of these startups IPO, potentially a lot of them early next year.
So, there is clearly excitement for the jewels of tomorrow. You named so many companies at the moment. What we also understand is that there's so many former employees or very early age investors who have shares, right? Now, we are talking about ESOPs or those shares that had been given, allocated earlier during the, maybe in the seed rounds and all of that. How does one buy that? The question I'm asking is on behalf of all our viewers tuning in. Supposing somebody wants to buy a share of a Paytm or a Zomato or a Byju's. Is it possible? And is there excitement for it? Is it recommended?
Well, I think from a retail investor perspective, obviously there are secondary rounds, and any IPO bound company will look at pre-IPO rounds and secondary rounds where they give exit to some of the early employees and other shareholders of the company. But what we have seen usually is that the pre-IPO rounds are for larger institutional investors or family offices, large family offices coming in 6 to 9 months or a year before for an IPO that happens. I think for retail investors, it's hard to kind of invest in some of these private companies, and I think that is how we think in the market. And obviously appetite is there because these are companies which are high growth, very different digital models away from the offline model we've seen in the past. So I think there is excitement for a lot of investors. But I think retail investors, it's more likely the pre-IPO rounds are happening for the institutional investors and the right kind of larger investors who can take a sizable stake, who can buy 3, 4, 5% of the company, rather than just a very limited stock holding which a typical retail investor would buy. So the kind of shift we're seeing is more towards pre-IPO rounds catering to the large institutional investors and not to retail investors.
Well, that's a great trend that you're talking about. And are you seeing this kind of interest in the hyper-local startups?
No, absolutely. I think a lot of these investors are long-term investors from the perspective that obviously the business model is proven now. I think nobody's questioning whether India needs an online food delivery business. I think it's clear, with Zomato and Swiggy being the largest two players and the need clearly established. I think the question was on profitability, and now with COVID, unit economics improving, I think it's an attractive business to hold. And I think from that perspective, considering the penetration levels in India, as rightly pointed out, we are going to be single-digit penetration in any category that we take. The offline to online shift will definitely take many, many years to come. And I think the value creation will happen as the offline to online mix becomes bigger and bigger. So clearly for a lot of these investors, it is going to be a more medium to long-term holding than just looking from just a pure IPO returns perspective.
Okay, so let's wait for all of that. But Rahul, thanks so much for joining us on this edition of the Startup Central. A pleasure talking to you. Really appreciate it. Happy New Year to you and everyone at Bernstein. And I'm sure we're going to be interacting a lot more. As we were discussing, look at the number of startups getting ready for an IPO. Well, with that, ladies and gentlemen, we're going to take a short commercial break.